Hi there, it's Kevin Casey from LeGrow. We are now on video number 2 for our tax time videos with Beth Porter from Noseworthy Chapman, who's a tax specialist. And this one is on the topic of all the ins and outs on meals and entertainment. So go ahead, order it up, Beth.
Yeah, we tend to see a lot of this. And, just off the top, I will say that when we're filing tax returns now, we've become so much more automated than we ever were before. Previous years, we would send information into Revenue Canada. They would have to key it into their system. Now they're getting it all electronically, which allows them to do a lot of statistical analysis on information. So they know what type of business you're in, and they know where you're located geographically. And then they have analytics that they will apply to see if you're outside the norm or within the norms. So in terms of meals and entertainment, again, you come back to it has to be laid out to earn income and it has to be reasonable in the circumstances. So if you're going out for a meeting, you want to make sure that you document the purpose of the meeting and who it was with. I say to my clients, it's not, I forgot to bring my lunch today, so I ran downstairs to the restaurant, underneath my office, and we decided to have a big lunch. There has to be a work purpose as to why that was incurred. A lot of times people will, there is a restriction of 50% that is considered, it's supposed to have a personal element in there. So CRA denies a portion of it. So only 50% of the meal and entertainment item is tax deductible unless it meets one of the exclusions. So one of the often missed ones is up to 6 events per year per location, as long as everybody is invited to attend at that location. So all the staff can be deducted in full. So that's like your office Christmas party, your summer barbecue, your family day that you have for your staff and their family, for example. And again, there's limitations, so you can't go overboard in terms of the per person cost. And CRA publishes all that. So again, you could deduct that in full. And as accountants, we would look for those. But again, it's nice if the client knows, and then they would code that in their accounting system to be more of an office type expenditure as opposed to a meals and entertainment type of item, so that we make sure we catch that.
And give me a story of something that is totally unreasonable and alarms are going to go off.
I had a person approach me one time, not a client. They were, I guess, interviewing me, and I was also interviewing them. And they were in a environment where they were providing, professional services, no employees, no big staff, and they wanted to buy a boat and have the boat as a company expenditure. So I mentioned to them about the reasonability and laid out to earn income, and they said, oh no, well, I'm going to entertain on the boat and I'm going to have all these customers / clients, and it's more of a promotional item. So anytime there was some kind of a personal element involved in an expenditure, or certainly any kind of asset like that, CRA is going to be looking at it hard. So if you're talking about, we've seen it, on the helicopter airline type of, or aircraft type of expenditure. It could be snowmobiles, it could be jet skis, it could be snowblowers for doing the office parking lot, for example, or a quad. Anything like that. So, you don't want to be too far on the side of that. And again, as long as it's laid out to earn income and reasonable in the circumstances.